We are going to discuss the basics of the preparation of income statement for manufacturing business. Okay? And first class, let us differentiate how to prepare income statement for merchandising business with manufacturing business. So we have already completed the preparation of income statement for merchandising business, and what we did is this: sales less cost of goods sold will give you your gross profit, less expenses will give you your net income. Okay, and we have calculated cost of goods sold by adding inventory beginning with net purchases. And the amount, if you added inventory beginning and net purchases, will be your merchandise available for sale. And then you will deduct inventory, and that will give you your cost of goods sold. Okay? Let us assign certain amount, assuming that our sales is 10,000. And then based on this, inventory beginning plus net purchases gives you merchandise available for sale less inventory end, and based on this information, assuming that the calculation will give you 6,000 for your cost of goods sold. Okay, so here, if we are going to calculate the cost of goods sold, okay, assuming that we will assign the inventory beginning at 1,500. And then assuming that our computed net purchases is 7,500, so our merchandise available for sale is 9,000. Then we will take a look of the inventory and how much is the inventory. Okay? And then assuming that our inventory end is 3,000, so that's how we have computed the 6,000 cost of goods sold. Take note, class. Again, inventory beginning plus net purchases will give you merchandise available for sale less inventory, and then that will give you your cost of goods sold. Okay, and now for your net purchases, you have to determine the gross purchases, and then you have to add the freight in and then deduct the purchase returns and the purchase discounts. Okay, and that will be the composition of your net purchases. Okay, so here with sales of 10,000, cost of goods sold of 6,000, then it will give you a gross profit of 4,000, and then we have to deduct our expenses. Okay, and it will give you your net income. Okay, so this is merchandising. Now for manufacturing, we will have a comparison with merchandising. Okay, so it's the same thing. Sales less cost of goods sold will give you your gross profit, less expenses will give you your net income. The basic difference of merchandising and manufacturing is the composition of your cost of goods sold. Okay, let us take a look. Your cost of goods sold will consist of your inventory for your finished goods. In merchandising, it's inventory beginning. It's more or less similar, but manufacturing the finished goods because you are in manufacturing business. And then you have to add the cost of goods manufactured. Okay, if you will relate the cost of goods manufactured with merchandising, this is your net purchases. So your cost of goods manufactured, assuming that this will be the information that we have, inventory of finished goods plus cost of goods manufactured will give you your merchandise available for sale, similar to your merchandising. And then you have to deduct the inventory finished goods, and that will be your cost of goods sold. Okay, let us assign certain amount, assuming that your cost of goods sold is 6,000. Okay, then how it is computed. So let us get the figure for our inventory finished goods. It will be given. Okay. And by the way, if we were going to complete the basic structure of our income statement, sales less cost of goods sold will give you your gross profit. Okay. So now, class, how did we compute the cost of goods sold? So again, we have to get the inventory of finished goods beginning, and we have to add the cost of goods manufactured. In cost of goods manufactured in um, classroom problem, you have to compute the cost of goods manufactured. Assuming that our computation for cost of goods manufactured is 7,500, so we will add the cost of goods manufactured with inventory of finished goods beginning. You will have your merchandise available for sale. And then let us take a look what is the inventory of finished goods and deduct that from merchandise available for sale. That will be your cost of goods sold. Okay? Now, how are we going to compute the cost of goods manufactured? Okay, so we will compute the cost of goods manufactured. First, we have to take a look the inventory of work in process beginning. The inventory of work in process means those that were not completed from last year, which will be the beginning for the current year. Okay, so we have to take a look of that inventory. And then we have to add the manufacturing cost, and then adding the two will give you goods in process. And you have to deduct the work in process end, okay, those that were not completed for the current year. That will give you your cost of goods manufactured. Again, your cost of goods manufactured is inventory work in process beginning, add manufacturing cost will give you goods in process, less inventory work in process and will give you your cost of goods manufactured. Okay, so let us see how this cost of goods manufactured is derived in when we are going to make the assignment of certain amount, assuming that our work in process beginning is 2000. So you have to look, okay, what is the inventory work in process beginning, the given in the problem? What is given in the problem with respect to work in process beginning? So you have to add it with your manufacturing cost. So assuming that the calculated manufacturing cost is 8,000, so adding the two will give you goods in process. And now you have to look how much is the work in process end. You have to find that from the problem. So if the work in process end is 2,500, then we have to deduct this from goods in process. So that will give you 7,500. Okay? So class, the cost of goods manufactured is calculated by adding inventory work in process beginning and manufacturing cost, and that will give you goods in process. Deduct the inventory work in process, and that will be your cost of goods manufactured. And your manufacturing cost is calculated by adding your direct materials, your direct labor, and your factory overhead. These will be the composition. These are the composition of your manufacturing cost. So the total of these three will give you the total manufacturing cost. Okay, to complete this statement, then let us put in our selling expenses and administrative expenses, and that will give you your net income. Okay? Take note, class. Basically, merchandising and manufacturing income statements are similar. Okay, class? And let us move on and let us illustrate again the cost of goods sold for manufacturing. Okay, because I want you to understand the concept of the income statement of manufacturing business. So class, direct materials plus direct labor plus factory overhead will give you your manufacturing cost. Okay, if you are in manufacturing business, these are the elements of your manufacturing cost. Okay, now If you have completed all the items, okay, that will be also your cost of goods manufactured. These are your manufacturing cost. That will also be the same as your cost of goods manufactured if you have completed all the items, if you have fully completed the goods that you are supposed to manufacture. And then, if all the goods that you have manufactured were sold, okay, this will also be your cost of goods sold. Okay, so if this is your manufacturing cost, and then when you do for example, your manufacturing cost for 1,000 tables, and you have completed everything, the tables, that will also be the cost of goods manufactured for your tables. And then you sold those 1,000 tables. That will be the cost of goods sold for 1,000 tables. But that is not the reality of the situation. I mean, the actual situation. Okay, it's not as simple like that. Okay, there will be timing difference at the end of reporting period at year end. Okay, what are those timing differences? So, for example, for direct materials, not all materials will be used. There will be materials that will not be used at year end. So in this case, we need to compute the direct materials. So in computing the direct materials, we have to take note of the inventory of the raw materials. So the inventory of raw materials will have a beginning and an ending inventory. The beginning inventory is the inventory in the beginning of the year, and the ending inventory is the inventory at the end of the year. So we have to compute the direct materials. To do that, we have to get the direct materials inventory beginning, and then we have to add all the purchases for the current year. Okay? However, class, we have to make sure that these purchases will add all freight in and will deduct the purchase discount and purchase return. What we are adding here is the net purchase, okay? And to get the net purchase, we have to determine the gross purchases plus the freight in minus the purchase discount minus the purchase return. So with that, you will have the materials available for use, and with that, the direct materials inventory, and then you will be able to get the direct materials used. Okay? Okay, for direct labor, normally it's a straightforward thing. Whatever in the record from accounting, that will be your direct labor cost because it is calculated normally on a yearly basis. Same with factory head, but the only difference is that you have to determine that all accounts were considered in getting your total factory head, which are the factory expenses like rent, insurance, utilities, depreciation. Okay? So you have to know all of these factory expenses, and you have to also include in the computation of your factory overhead the indirect materials, the cost of indirect materials, and the cost of your indirect labor. So all of this should be included in determining your factory overhead. Okay, now this tree will now be your manufacturing cost. Okay, if this you were able to complete all the items, this will be your cost of goods manufactured. And if you were able to sell all the items that you have manufactured, that will also be your cost of goods sold. However, class, not all units are completed at year end. So meaning from last year, there will be high probability that some units were not completed. So those units that were not completed are called the work in process. So work in process, you will have an inventory beginning, which are the units that were not completed from last year. So with that, you have to add your work in process beginning, the inventory. Okay, you have that with your current manufacturing cost. And the total of this will be your goods placed in process. So meaning these are the cost of goods that you are processing for the current year, which are the cost of the goods that were not completed from last year plus the current cost now that will be your goods placed in process. And you have to deduct from here the work in process end, meaning those goods that you have not completed at the end of the year. With this, you will be able to get your cost of goods manufactured. So your cost of goods manufactured, okay, as we have discussed in the previous slide, is that work in process beginning plus manufacturing costs will give you goods placed in process, less work in process and will give you your cost of goods manufactured. Okay, these are the cost of goods manufactured. If you were able to sell this, everything, that will be your cost of goods sold. Again, in actual situation, those that you have manufactured, not everything will be sold. Okay, so there will be an inventory of those finished goods, those that were not sold. So not all units will be sold, okay? So here, to get the cost of goods sold, you have to add the finished goods beginning, okay? The goods that were not sold from last year, add that with the cost of goods that you have manufactured for this year, then that will be the cost of merchandise available for sale, and then you have to deduct those that were not sold at the end of the year. That will be your cost of goods sold. Okay? Okay, class? And now, let us just present what we have discussed in the income statement. Okay? So we have our sales. Again, less cost of goods sold will give you your gross profit. Less expenses will give you your net income. Okay. Class, in sales, we have learned from our lecture video that we have to deduct our sales discount and sales returns so we can get net sales. So assuming that our sales is 10,500 and our sales returns and sales discounts is 500, so we have to deduct this from the sales. And it is very important before we will compute our gross profit, we have to make sure that we will get the net sales. Now, the cost of goods sold. From sales, we will deduct the cost of goods sold. The cost of goods sold, again, as presented, is computed adding inventory of finished goods beginning. You have to add the cost of goods manufactured, and that will give you the merchandise available for sale. Then you have to deduct the finished goods inventory and that will be your cost of goods sold. Assuming that when we did this consideration, okay, when we computed the amounts on these accounts, our cost of goods sold resulted to 6,000. Okay, so in this case, sales less cost of goods sold will give you your gross profit of 4,000. And just to complete it, less expenses, assuming that our expenses is 1,900, so our net income is 2,100. Okay, now, class, let us assign the amounts, okay? So we can clearly see how the 6,000 was computed. So here we have to know the amount of our inventory finished goods beginning. So assuming that it is 1,500, then we have to know how much is cost of goods manufactured. Cost of goods manufactured in examination, it is always computed. Okay? Assuming that our computation uh, the accounts that we have to consider in our computation of cost of goods manufactured is inventory work in process beginning. We will add manufacturing cost, and then that will give you your goods in process less work in process and inventory. That will give you your cost of goods manufactured. Assuming that based after computing the inventory beginning, adding manufacturing cost, that will give you your goods in process, deducting inventory work in process, and assuming that we got this amount, okay, after considering this, okay. So in this case, we have to add 1,500, which is inventory of finished goods beginning. We have with the cost of goods manufactured, that will give you your merchandise available for sale. And then let us take a look how much is the inventory end of finished goods. So we have to deduct that for merchandise available for sale. That will give you your cost of goods sold. So this is how you are computing your cost of goods sold. Again, inventory, finished goods beginning, add cost of goods manufactured. Okay, so in this case, it's 7,500. Will give you merchandise available for sale. Okay, then deduct the finished goods and will give you your cost of goods sold. And now let us take a look of how the cost of goods manufactured is calculated, assuming that inventory beginning is 2,000 and assuming that manufacturing cost is, that computed is 8,000. So adding this will give you your goods in process, and we have to deduct the work in process, and that will give you your cost of goods manufactured. So this is how we are going to compute the cost of goods manufactured. Okay, this is how we are going to compute the cost of goods sold, and here this is how we are going to compute the cost of goods manufactured. Okay, and now to compute manufacturing costs, we just have to add direct materials, direct labor, factory overhead, and that will give you your total manufacturing cost. Okay, so basically these are the elements of the income statement of manufacturing business. Okay, to complete that, we have to get the selling expenses and the administrative expenses. By the way, this presentation is a functional presentation of expenses. So when we say functional, it is based on the functions of the company, administration, selling, and there can be different other functions, okay, depending on the company. And if it is a natural classification, that would be the presentation of sales, utilities, I'm sorry, sales, salaries, utilities, rent, and things like that. Okay? Okay, class. Now, in some companies, they are not, there are certain department or officers that will not need everything under the income statement. Probably like in the production area, okay? They would like to just have a statement of the cost of goods sold because they don't care so much about what's in sales because sales will be a marketing concern. So they are more concerned on the cost of goods sold. So we can prepare a statement of cost of goods sold. Okay? Uh, Getting the information from this. So we can do a presentation of the cost of goods sold. So when we prepare a statement of cost of goods sold, so the normal thing that we are presenting will be considered in the cost of goods sold, which are the finished goods inventory beginning and the cost of goods manufactured will give you your goods in process, less work in process end, will give you your merchandise available for sale, less inventory of its goods end, then will be your cost of goods sold. So these are the accounts that we are going to present on the statement of cost of goods sold. There are also problems, okay, in the classroom problems that will only ask for the preparation on the statement of cost of goods manufactured. This is cost of goods manufactured. So in this case, if we will be asked to prepare a cost of goods manufactured, so we will present these accounts under the statement of cost of goods manufactured. Okay? So we will present the inventory work in process beginning plus manufacturing cost will give you goods in process less work in process end. That will be for your cost of goods manufactured. There will also be situations, okay, that the statement that will be asked is a statement of manufacturing costs. So in that case, then we just have to include all of these accounts. The how did we get the direct materials, direct labor, factory overhead, if we will be asked to prepare the statement of manufacturing cost. Okay? So, class, if you were asked to prepare an income statement and you already have prepared the statement of cost of goods sold, so what you will be presenting is only the the amount that you have calculated for the cost of goods sold. You will omit already this because there's already a separate statement. Okay? However, if you were asked to prepare manufacturing cost as a separate statement, then under your cost of goods sold, then these direct materials, direct labor, factory overhead will no longer be reflected, the details, but the total amount will just be considered in the presentation of your cost of goods manufactured. Okay, so what I'm trying to say here, if you have already prepared a detailed statement, okay, so the bottom amount will only be presented on the other statements. Okay, class?